The selling in the Dow has occurred after they gapped it up in the overbought condition last week. The Japanese race traders use the gaps to tell you when exuberance is coming into the market. Our simple trainings on how to use gaps with candlestick signals, notice we have a doji gap up. That started the uptrend. Notice we have a doji gap up in the overbought condition. That's usually telling you you're near the end of an uptrend. Now, the pullback, as you can see, after the first selling day, has 2 days of dojis, which means there's very inconsistent, indecisive selling going on. And the main factor is they've used the T line once again as a support level. So this still puts us in a situation where the analysis of the uptrend can still be made easy visualized, I guess, based upon a positive open telling you they weren't going to come back down through the T line. The NASDAQ, although it closed just below the T line, did so with a very indecisive trading day, and you'll notice that it actually closed above where it opened. So if you take that into account on the daily trading information, that if they were buying above the level where they opened it, that pretty much told you there were still buyers in this market. The sellers haven't taken over control. And we have the simple rule of the doji. The price or the trend is usually going to move in the direction of how they open after a doji. Not only does the candlestick signals illustrate what sectors to be in, it also illustrates which sectors not to be in. For example, notice the crude oil chart. There is absolutely no trend and there is no consistency. Up, down, right in this trading range, which tells you there's not any real great enthusiasm one way or the other in the oil sector based upon crude oil prices improving balance sheets. So this chart alone tells you you probably want to stay out of the crude oil stocks for a while. And as long as the market indexes are not showing any dramatic change of investor sentiment, we can go after price patterns such as the fry pan bottom and our recommendation on NOVN today. It gapped open. We could be buying because what do we expect coming out of a fry pan bottom? Strong price move. And how does that price move usually get initiated? Usually with a gap up. And what's our doji rule? Prices are usually going to move in the direction of how they open after a doji. So if it opens positive tomorrow, that's still additional information confirming that there's a fry pan bottom in a gap or a breakout area, making the first potential target up here at the 50-day moving average. A major advantage candlestick investors have is not only can they address which direction a price move is going to go, but they can calculate what the rate of return is based upon where the next target is on a candlestick chart. That'll be it. We'll see you in the chat rooms.